Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, I'll be reacting to some research from Loup Ventures attempting to size up the global transportation market, including new passenger vehicles, the trucking industry, and ride-hailing, aka the markets that Tesla is going to absolutely dominate in the near future. So let's get into the video. But first, hey guys, if you'd like to help out the channel and get up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. Unless you don't like free stocks, that is. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it. Sizing Up the Global Transportation Market by Gene Munster and David Stockman. What a relevant surname. As investors, we review thousands of company decks every year. Oftentimes, we underweight the total addressable market slide, given every company seems to advertise a massive total addressable market. We've lost some faith in said company's ability to reasonably estimate their addressable market. One of these markets is transportation, which is in the early stages of a comprehensive disruption as it shifts towards electric, software and machine-driven, and mobility as a service. The below exercise is our attempt to estimate 3 segments of the transportation opportunity: the new vehicle market, trucking and logistics, and ride-hailing. The new vehicle market. We estimate the global market for new vehicles, including cars, light trucks, commercial vehicles, and semis, is about $2.8 trillion. And we can see the breakdown here: commercial vehicles, vans and buses around $750 billion, semis around $1/3 trillion, and passenger vehicles almost $2 trillion alone. EVs currently account for 3% of global new vehicle sales. We believe over the next decade that number will reach 50% plus. Just want to jump in here. I completely agree. In fact, I think we'll be closer to 80% around 2030. Could be wrong on that one. It's very hard to estimate exactly when this enormous disruption takes place, but it will follow an S-curve. It will happen a lot faster than people think. I mean, the writing's on the wall. We're already around price parity, never mind much lower total cost of ownership, including maintenance, as well as actually just recharging the vehicle, electricity in general, far cheaper than gasoline. So for any companies today to be pouring any resources whatsoever into research and development of new internal combustion engine vehicles, they've got to be completely fucking brain dead. Of course, the same can be said of consumers. Now, I don't want to trigger too many people here, but if you're an intelligent consumer, if you're a rational consumer, and you actually do your research before making such a major purchase as a new vehicle, you will realize that today, if you buy an internal combustion engine vehicle, you're a moron. Why would that be? Well, apart from the fact that the value of this technology is going to fall off a cliff within a few years as EVs completely disrupt the ICE industry, you're also talking about purchasing inferior technology that's going to be more expensive to own and operate, and of course there's also the environmental impact. Now, it will take a while for some consumers to wake up and smell the roses, just like with every disruption. Not everybody immediately went out and bought a smartphone, but guess what? We all have them today. The same thing can be said for internet access. Not everyone went out and got a computer with a modem and connected to the internet, but now practically everyone has internet access. The same thing is going to happen with electric vehicles. Some consumers will be a little bit slower than others to realize the potential there, but in either case, there's 2 very strong forces driving the death, the extinction of the internal combustion engine vehicles. It makes no business sense to pour any resources into making these things in the future, and as a consumer, it makes very little sense to purchase one. Obviously, part of my obnoxious analysis here is the fact that we know that the cost of electric vehicles are going to continue to fall over time. The same cannot be said for internal combustion engine vehicles. What do you think is going to happen when the price continues to decline, the performance, features and functionality continues to improve of EVs, and ICE vehicles actually get more expensive and worse over time? No one's going to make them, no one's going to buy them. And I don't think people are anticipating how quickly this is going to happen. Let's pick that up again. EVs currently account for 3% of global new vehicle sales. We believe over the next decade that number will reach 50% plus and represent outsized opportunities for EV-first automakers such as Tesla, NIO, Rivian, and possibly Apple, along with traditional OEMs that successfully pivot their vehicle and brands to electric. Now, I just want to jump in here. I think that the Apple thing is really a long shot. At some point in the future, sure, maybe they get into the EV market. Maybe it's just software. Maybe they only set up their own vehicles. They don't actually sell to customers. They have special loops. You can maybe use Apple Transport and have Apple software, Apple App Store, Apple infotainment in certain routes, in certain cities, etc. Who knows how that plays out? But I do think it's a pretty low chance that Apple's going to have any meaningful impact if they design design and manufacture their own electric vehicle. They're starting the race so late, and yes, I acknowledge there's definite brand power, I totally understand that. But the thing is, there's already an Apple of EVs. It's Tesla. Now I understand that Apple can come in, they will have some brand loyalty that will help them. But they're so late to the party. They don't have any compelling technology they're aware of. And yet we have Tesla running away, accelerating their lead, taking a huge dominant first mover advantage. I don't see anyone catching up to them, Apple or otherwise. It doesn't matter how many resources you've got. Now I hope Apple can prove me wrong, but I will be surprised if they can have a meaningful impact in the electric vehicle market, either through hardware or software. And as for traditional automotive OEMs successfully pivoting their businesses to electric vehicles, easier said than done. There's going to be a lot of casualties, many bankruptcies, many mergers and acquisitions, far few total vehicles sold, far less total revenue going to these traditional OEMs. Tesla is going to be eating the lunch of every single one of these legacy automotive manufacturers. Very few will survive through to the end of the decade. Mark my words. Trucking and logistics. The total global logistics market is typically calculated as a percentage of GDP, with annual estimates pegging a number around 10% or just over $9 trillion. Within this market, we focus specifically on trucking as we believe it represents the most disruptable segment in the near term through electrification and autonomy. Rail and maritime will follow. Trucking accounts for roughly 40% of the total logistics market, or about $3.8 trillion. Within trucking, there are two primary verticals: the asset-light segment, comprised of third-party logistics such as brokerage services, and the asset-heavy segment, which involves owning and managing fleets of semis and large trucks. The asset-light verticals account for around 25% of revenues, about $1 trillion, with that percentage expected to continue moving higher over the next decades. This vertical is highly fragmented. Looking at the US alone, C.H. Robinson is the market leader with around a 10% share, followed by multiple companies with 5% share or less. For perspective, Uber Freight did just over $1 billion in revenue in 2020, which represents about 0.5% of the asset-light trucking market in the US alone. Just jumping in here, if you guys aren't getting the sense, this market is fucking enormous. Putting it together, we believe 100% of the asset-light vertical is addressable by tech-native companies, including Uber and Tesla. The asset-heavy vertical accounts for the remaining 75% of the global trucking market. Steep investment costs associated with building and maintaining a fleet advantages incumbents, meaning this segment will take longer to disrupt. That said, in the long run, decade plus is their estimate, the entire asset-heavy vertical will be disruptable by autonomy-focused and software-centric transportation companies such as Tesla. As a preview of this shift, in the company's December earnings call, Musk says he expects trucking will be the first transportation segment to achieve full self-driving. Long, predictable highway miles are ideal for autonomy. So in case you haven't figured it out already, the opportunity in front of Tesla in truckings and logistics is colossal, like absolutely gargantuan, something I think most people are overlooking because it doesn't really touch the typical consumer and the typical retail investor. You're probably not sitting at home thinking a whole lot about logistics and trucking these days, are you? Much more likely, for example, that Tesla stock investors are more interested in and focused on their passenger vehicles for the consumer market, the Model S, 3, X and Y, soon to be Cybertruck, and also other vehicles down the pipeline. For those of you who are playing along at home, we're talking about a $3.8 trillion trucking opportunity plus a $2.8 trillion new passenger vehicle market for a total opportunity so far, not even including ride-hailing, of $6.6 trillion. Ride-hailing. Ride-hailing is an area that receives massive total addressable market estimates. We do our best to make a middle-of-the-road to conservative projection. Per the OECD and Goldman Sachs, it's estimated about 15.5 trillion inland miles, excluding rail, are travelled globally per year. Of these, about 65% are personal vehicle miles, 34% are public transport, and just over 1% are rental car or ride-hailing miles. Looking specifically at the personal miles segment, the US Bureau of Transportation estimates 70% of total vehicle miles in the US are urban and 30% are rural. We assume this mix is more or less similar across the world. In the near term, pre-full autonomy, we believe 15% of urban miles and 3% of rural miles are disruptable by ride-hailing companies. On the public transport side, we assume 5% of all miles are disruptible. We believe personal vehicle miles are more disruptible than public transport miles, as their higher cost per mile structure, 55 cents versus 20 cents, makes ride-hailing a more attractive substitute. Combining these two segments, we estimate there are roughly 1.45 trillion disruptible miles at an average price of around $2 per mile for platforms like Uber and Lyft. This implies potential gross bookings of nearly $2.9 trillion. Once again, we discover yet another multi-trillion-dollar opportunity directly in the crosshairs of Tesla. And as Loup themselves point out, they tend to err on the side of being conservative in their estimates. And in this particular case, I think in terms of their estimate of the total addressable market for ride-hailing, I think they are massively underestimating. Then again, this is a recurring theme throughout history. When was the last time somebody accurately predicted a disruptive, innovative technology, its adoption rate ahead of time? So for those of you playing along at home, let's just tally up these opportunities again. We've got the automotive, the new vehicle market, a $2.8 trillion opportunity. The trucking market, a $3.8 trillion opportunity, already taking us to $6.6 trillion. And the ride-hailing opportunity, a very conservative estimate, even in the words of Loup themselves, taking a total opportunity in front of Tesla, not even including the energy business, of $9.5 trillion. This is a near-term estimate and is therefore meant to be conservative. In the long term, 10 plus years, we expect full autonomy will be widespread and fundamentally alter the ride-hailing value equation by drastically lowering per-mile fares. And I'm jumping in here, I absolutely agree. On the timing, it could be sooner than 10 years, we'll just have to wait and see. This will in turn increase consumer demand. Eventually, we believe autonomous ride-hailing services that are running nearly 24/7 will make owning and operating a vehicle more expensive for many urban residents than simply subscribing to mobility services. In this scenario, we expect many people who had previously owned a car will not, and those with two vehicles will shift to owning just one, thereby further expanding the ride-hailing addressable market. And I wholeheartedly agree on this point. If you can use on-demand transport as a service for a fifth or a tenth of the cost of owning a personal vehicle, you don't need to store your vehicle, there's no maintenance, insurance, etc. As a consumer, that's going to be a very attractive proposition. Save a few $1,000s per year and use transport as a service, or own my own vehicle, insure my own vehicle, pay for maintenance on my own vehicle, recharge or refuel my own vehicle, have to have some space, physical space to actually store/park my vehicle. There's going to be a lot of consumers in metropolitan areas who think, you know what, fuck owning a car, I'll just use this transport as a service. It's cheaper and more convenient. Smartphone market comparison. We looked at the size of the smartphone market to put the transportation opportunity into perspective. Using 1.4 billion annual unit sales with an average selling price of $310, we estimate the global smartphone market is around $450 billion. That's the size of the current market. What could the market become? There are approximately 3.5 billion smartphone users globally, implying a 45% penetration rate. We believe eventually 75% of the world's population, or 5.8 billion people, will be smartphone users. Assuming an average 1.2 phones per user with an average life cycle of 3 years per phone, this implies about 2.3 billion annual unit sales. At an average selling price of $325, this implies a $750 billion market, $750 billion. While the smartphone market is large, it's dwarfed by the transportation opportunity. Man, I want to read that line again. Let this one sink in. While the smartphone market is large, it's dwarfed by the transportation opportunity. We believe that the size of the transportation market is one reason why Apple appears increasingly serious about making a car. Can't argue with that. The opportunity, if Apple were to enter the vehicle market, is colossal, but as I mentioned earlier, Tesla already has an enormous lead and it's accelerating. So yeah, good luck getting a meaningful slice of that pie. Will Apple enter transportation? While a large total addressable market is a necessary condition for Apple to enter a market, it's not a sufficient condition. Guided by previous commentary from Tim Cook, we identify 3 criteria that must be met for Apple to enter a market. Ability for vertical integration. The opportunity to bundle its hardware, software, and services is a necessary condition for Apple to enter a new market. We view the car of the future as electric, autonomous, and an emphasis on in-car entertainment. With experience in batteries, operating systems, cameras, design, and services, we believe the vertical integration condition is met. 2. A massive market. As the above exercise illustrates, simply taking 3 segments of transportation yields a multi-trillion-dollar market. 3. A profitable market. To be determined. Historically, the automotive industry has had thin operating margins in the mid-single digits. Over time, Tesla has the goal of achieving tech-like margins in the 20% range. To achieve this, we believe software subscriptions for features such as full self-driving and in-car entertainment, along with a robotaxi fleet, will be necessary. If Apple succeeds in making Apple Car, we believe Apple would have a similar opportunity to augment its vehicle hardware offering with high margin revenue from software and services. While Apple would not be the first mover in these segments of the transportation market, they would have the cash and expertise around hardware, software and services to be a potential long-term winner. Let me know in the comments below. What percentage of this $9.5 trillion transportation opportunity could you see Apple theoretically capturing in a best case scenario, let's say by 2030? Let me know in the comments below. Personally, it's not enough to get me excited. As I've said many times, Tesla has won the decade. It's now just a matter of watching this play out. Tesla continues to amaze and impress with their technology, their manufacturing prowess, and their software capabilities. Never mind their pace of execution. I really don't see anyone catching up. It's just a matter of Tesla scaling their production as fast as they possibly can, driving their costs down as fast as they possibly can, and selling as many vehicles as they possibly can. Everyone else is battling at best for a distant second place. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you'd like to help out the channel and get up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.